If you're familiar with e-commerce, you probably spend a lot of time worrying about how to improve traffic, conversion rates, or reducing acquisition costs. But sometimes the easiest way to actually increase revenues in e-commerce is way simpler. Get customers who are already buying from your platform to spend a little more. And I know it's hard to believe, but one of the easiest ways to do that is through your free shipping threshold. Something you need to understand is that people behave strangely whenever things become free. We've seen customers line up for hours to get one free coffee from that fancy coffee brand that just opened, even though every morning they buy a very similar coffee from another brand for just a couple of euros. And that's the interesting part. It's not always about saving money. There is something about the word free that changes the way in which us consumers think about how we value things. And this exact thing happens also in e-commerce. So imagine you're shopping online and your cart is worth 43 euros. And suddenly you see a tag. You're only 17 euros away from free shipping. Shipping itself might cost 5 euros. So logically, spending another 17 or 20 euros just to avoid paying 5 euros for shipping, it just doesn't make a lot of sense. And yet, customers do it all the time. And there's actually a psychological reason for this behavior, which is called the zero price effect. Hi, my name is Paolo, and in this video, we're going through one of the biggest tricks of e-commerce to actually increase the size of your cart without adding one single visit to your website: the free shipping. But there is one important catch that you need to know. This strategy works only if you choose the right free shipping threshold. So in this video, I'm going to show you how this tactic works, why the wording and the strategy about free shipping changes customer behavior, and I'm going to show you how to leverage on your own data to pick a threshold that actually works for you. Let's begin. Let's start with a very simple example. Imagine that most customers on your e-commerce spend around 50 euros. That means that the average order value of your e-commerce store is 50 euros. And now let's take the same example that we were talking about before. So a customer was shopping online on your e-commerce with a cart of 43 euros. And here you basically have two options. You could charge them 5 euros for shipping, or you could tell them spend 17 euros more to unlock free shipping. So basically free shipping starting from 60 euros, 43 plus 17. What you've done here is that you've created a completely different decisions in the customer's mind. The customer needs to decide whether he wants to pay 5 euros and receive nothing in return, or spend 17 or 20 euros more and actually receive another product. Maybe it's a pair of socks, an accessory, a beauty product, or a gadget, but whatever makes sense for your assortment. And you can make this even easier for customers to choose by showing a few relevant products directly at checkout within the recommendation section. And it would be ideal if these products were already matching the amount that the customers need to add to the cart in order to reach the threshold. Best if the products are low AUR. And this is a similar strategy that shopping malls use whenever they intentionally make customers queue in very long queues before reaching the checkout. In e-commerce, instead of asking the customers to go back to browsing other products that they may like, you're basically telling them, you are 17 euros away. Here are 3 products that can get you there. So 43 euros cart becomes a 60 euro cart. You've increased the size of your order without acquiring another customers, without another ad click, and in general, without charging your entire website. But why is it so effective? So there is a behavioral economic concept called the zero price effect. The basic idea is simple. We don't react to zero in the same way that we react to other prices or a normal discount. For example, going from 2 euros to 1 euro means saving 1 euro and represents a 50% discount. But it's not the same thing as going from 1 euro to 0 euro, which is also a saving of 1 euro. But the two things just don't seem equivalent. And it's been demonstrated that when something becomes free, people perceive its benefits as disproportionately higher. The zero price effect is basically a cognitive bias where consumers overvalue the benefits coming from free items. And free shipping fits perfectly into this. But the zero price effect goes far beyond e-commerce. In gaming or software as a service, freemium models use the same principle to lower the barrier to entry and increase traffic acquisition. So by offering the core product for free, companies can remove the financial burden and friction that might otherwise stop customers to sign up or download the app. But there is also another psychological layer. In e-commerce, customers tend to mentally split the money spent on products and the money spent on shipping. If I spend €5 on shipping, well, I'm only spending €5 to receive the products that I already bought and paid for. But if I spend another €15 or €20 on a t-shirt, well, at least I'm getting another t-shirt. So even though the first option, the paid shipping at €5, is objectively cheaper, well, it just feels worse. And that's exactly why free shipping can be much more powerful than simply giving customers a discount of €5, or even worse, giving additional promotions that should allegedly increase the cart value. But here's the catch. This strategy only works if customers believe that the free shipping threshold is actually within their reach. Taking the same example as before, if the same customer had to reach €200 and not €60 to get the free shipping, maybe that €43 cart just didn't reach the threshold and simply added the €5 shipping. And that's where data analytics can play a massive role in your e-commerce strategy to define your shipping threshold. Hear me out, because this is probably the most important part of the entire video. Here's what a lot of e-commerce do. They look at their competitors and decide their shipping threshold based on their average order value. Let's say that the AOV, the average order value of your e-commerce, is 50. And someone might decide to say, well, let's put free shipping at €60 to increase average order value. The thing is, the average alone is not enough to take this decision. What you need to understand is how your orders are distributed around the average. And to do that, unfortunately, we're going to have to use statistics, descriptive statistics. But I'm going to try to make it as simple as possible. Imagine two e-commerce stores that have the same AOV of €50. As you can see from the chart on your left, on store A, the first store, 75% of your customers spends between €45 and €55. On store B, on the other hand, the distribution of the order across their average order value, it's much different, and in generally it has a higher variance. Basically, what we can see is that 30% of customers, so a big chunk of customers, spend little, between 20 and €34. And another big chunk of them, 35%, spend much more, between 65 and €89. The average just happens to be 50. How you can interpret this? So you've got two different stores, same average, but completely different customers' behavior. To interpret this the easy way, I would just say that in store A, the orders are distributed pretty well around the average, while in store B, well, the average order value of your e-commerce, it just happens to be 50. But your orders, they're not sitting around that value. So if you need to decide a shipping threshold for your e-commerce, I would definitely start from your AOV. But then don't stop there. Go one level deeper. You can create a simple distribution table like the one I've shown in the chart, or even better, a box plot. Let's take again store A as our example. The ranges are 4. As mentioned, the big majority of your customers, 75% of them, spend between 45 and 55. Then maybe putting the shipping threshold at 100 obviously isn't going to change much. The target at €100, it just feels impossible for your customers. But maybe €55 makes a bit more sense, because 35% of your orders, 1/3 basically, are sitting between 45 and 50. So they basically have to add a value between 5 and €10 to reach the threshold of 55. While 40% of customers are sitting between 50 and 55. So they're basically need to add only a couple of bucks to reach the shipping threshold. They're not going to be a friction for them. So suddenly a very large portion of your customers is within reach of the target, because you're basically leaving out only the 5% of customers who spend less than €45. But don't worry, if you don't feel confident asking this much from your customer base, you could also be more conservative and test €50 Or if you want to be more aggressive, you could test 60 euros. And if there is something that I would like you to take away from this video, is the following. Do not choose your free shipping threshold because 50 or 75 or 100 or 200 euros just looks like a nice round number, or because your competitors use it. Choose it based on what your customers are already spending and how the distribution of your orders looks like. You want the threshold to be close enough to nudge your customers to add another unit to the cart, while still being high enough to actually improve the economics of your business. The level of the threshold itself suggests how shoppers perceive the offer, and this is why you shouldn't treat it as a random number. So this is my suggestion. Leverage on data analytics to select which threshold fits best for your customer base, and then test it, see the results, and adjust accordingly. Try 50 euros. If your average order value in 1 week or 2 weeks hasn't increased by a couple of percentage points, well, then try 55 and then maybe try 60. And monitor not only whether your AOV has actually increased, but also your conversion rate and your margin after the shipping. Because this trick of free shipping with a threshold is also used to increase another important KPI of e-commerce, which is UPT, the unit per transaction. And the higher the UPT, the lower the impact of your distribution costs on your P&L. So long story short, the goal, as always, is not just to create higher value carts or bigger carts. The goal is to create more profitable carts. So if you want to test this on your e-commerce, the process is actually very simple. Start with the average order value of your e-commerce, the AOV, but don't just stop there. Look at the distribution of your orders and see where the majority of your customers are actually spending the money. Then place a free shipping threshold just slightly above a meaningful group of customers. And spend some time and money to add a simple UI and UX element at the checkout, a dynamic progress bar, to communicate exactly how much your customer are missing to reach the free shipping threshold, with a message such as you're 12 euros away from free shipping, and then make it incredibly easy for customers through recommendation to add relevant products to the cart. You're essentially combining data with a very simple psychological principle. People really like the word free. And sometimes that tiny little message that you added at checkout can be very helpful to turn small order into much bigger ones. Here's all about increasing the cart value of your e-commerce. But if you like this video, make sure to hit the like button and follow my channel. And if you want to learn other strategies and tactics to increase your sales of your e-commerce and scale your brand online, make sure to check out this video where I ranked the 9 most common strategies that marketers use to scale their e-commerce brands. Bye. Thanks for watching and see you in the next video.